The forex beginner strategy. In this video you will learn what type of market environment is best to trade the beginner strategy, which market participants move price, what the best times to trade are, when to avoid trading, what type of market environment to avoid. The forex beginner strategy looks to take advantage of a trending market environment. In order for a trend to become established, there needs to be a significant shift in market sentiment, so that either the buyers or the sellers take control, driving the price in one direction. Even though the forex market is a 24-hour market, opening with the Asian session on Sunday evening GMT and closing with the American session on Friday evening GMT, there are optimal times to trade within that period because there are times when the market is more liquid than others. It is in these liquid times that trends are more likely to become established. The markets are most liquid and active when banks and financial institutions are participating. They trade billions of dollars every day, causing huge shifts in supply and demand of any particular currency. This ultimately causes the price of a currency pair to rise or fall. It is when the banks and financial institutions are moving the price that a trend is more likely to be established. As a general rule of thumb, the forex market is most active and liquid during the European session from 8 to 1700 GMT. If you limit your trading to these times while you are beginning to learn, then you are ensuring that you only trade in the most liquid market conditions that are likely to result in a trend. The financial markets are particularly active at the open of these sessions, such as when the London market opens at 8 GMT and at the open of the New York session at 1300 GMT. A mid-session is when traders in so-called active sessions become less active for a period of time. An example is the time between 11 and 1300 GMT, when European traders are at lunch and are also waiting for the New York session to open. Another example is 1700 to 1900 GMT, when European traders go home for the day and US traders go to lunch. Mid-sessions are something to consider if you enter during the middle of a trading session. To get the very best market conditions, you may want to avoid starting your trading day in a mid-session if you observe that the market seems to be lower in activity. Not all European and New York sessions are highly liquid all of the time, and Asian sessions do not result in low activity and ranging consolidating markets all of the time. It is therefore useful to be able to recognize low liquidity periods on a price chart. Times of low liquidity can be identified on price charts when consolidation is visible. The chart shows price action that is ranging or moving sideways with no clear direction. You can see that the market is consolidating during low liquidity hours, and so in these times, you could stay out of the market until a trend has been established. A highly liquid market can be recognized when there are large candle bodies, with price moving in a clear direction. You can see that the market is in a clear uptrend. These market conditions are ideal for trending strategies, such as the beginner strategy. You should note that this type of analysis, that is, looking to see if the market is generally trending or ranging, should be carried out on a higher time frame, where the overall market environment is easier to assess. So far, you have learned the beginner strategy is a trend-following strategy and that market volatility is needed for a trend to establish itself. Forex is a 24-hour market, and there are times where the market is more liquid and volatile than others. The market is most liquid when banks and financial institutions are actively participating, and this is when a trend is more likely to develop. The most active and liquid markets are considered to be when the European session starts at 8 GMT and finishes at 1700 GMT. Mid-sessions are periods of lower liquidity in active trading sessions and happen when traders go to lunch or when traders go home after their day is finished. Highly active and liquid markets can be recognized on price charts. A low liquidity market environment can be recognized when prices entered a range with no clear direction. A highly liquid market can be recognized when candles have large bodies and are moving in a clear direction on a chart. The market direction should be determined using a higher time frame.